Yo, yo, yo. What's up, guys? Welcome back to the channel Crypto Market on the Brink. Guys, we're going to have a look at the crypto market today and why it is potentially on the brink. Yesterday, we had a bearish day. Well, we've had a bit of a bearish week. Of course, Sunday, we got the move up. And then ever since the start of the week, since the week opened, we have just had red candles, guys. And red candles are not bullish. So we've had 1, 2, 3, 4 in a row. Will it be 5? Let's see. Bitcoin yesterday closed basically perfectly on that 200-day EMA, as you guys can see over here. It did come underneath and look a bit scary under that 106K, just basically came perfectly into this daily open and close level right over there, which makes perfect sense and got a nice bounce out of there. If this level was lost, ultimately the next level to have been looking out for would have been that 105K over there. Now that 105K is an important level. We're going to speak about the 105K level now, and we're going to have a look at Bitcoin futures, guys, because not many people look at this chart, and I think it is important. But for now, Bitcoin is just kind of going sideways. It's basically been going sideways since the 21st of May. No questions about that. There we go. Sideways for 163 days, guys. So boring. And yeah, I mean, if you bought here, you would have, watched your account just go up and down a bit. But basically a lot of nothing. Okay, a lot of nothing. And this pattern is starting to look a little bit distributive with this deviation over here, but it is holding the 200-day EMA. The 200-day EMA is often the line in the sand. So I'm personally in no trades at the moment. I got into a little bit of a Bitcoin short, but I did close it before the news, unfortunately. But that is what it is, guys. That is part of the game. So we're going to have a look at the Bitcoin futures quickly. Haven't looked at this in a while. Or the CME futures, should I say. And obviously, this doesn't have your weekend candles. So this only has the weekly, daily candles. So your Monday to Friday. So, of course, your EMAs are going to be different. And what you can see is that there is this important EMA over here at that 104K zone over here. So for me, this is kind of my line in the sand. I don't want to lose this this low over here. So I'm going to make this green. If we start to close candles underneath this zone over here, something like that, this is going to be, for me, a very bearish signal. If we start to consolidate underneath that 104.3K level over there, this is going to be looking really, really bearish, and we're most likely going to come down and, come down into those low levels. And next week, we're going to go into those potential bear market lows where we can find supports looking at the longer term timeframes. But for now, guys, this is looking a little bit distributive over here. You can see this is your major resistance with this deviation. Of course, we are stuck below the 50-day EMA, and this is starting to angle to the downside. And when it's angled to the downside, you can expect price to go to the downside. But the thing is, it's still above that 200-day EMA. This is, of course, for the Bitcoin CME futures. So not too much to panic about until it is underneath then. But for now, we have basically just been going sideways for a long time now. And yeah, the market is starting to get a little bit boring, guys. There's no doubt about that, no question about that. These are often times where you can find those lows. I'm not saying the top is 100% in. We could easily get another last leg up phase over here, come to that 135K. But what you got to ask yourself, guys, is we've come a long way. We've come a long way. We've done one hell of a move up. Up about 700%, 600% from lows to current prices. And if you got that safe entry at that 25K level to right now, you're up 300%, and that is a great gain, guys. That is a great trade. That is an unreal trade for if you're tripling your money, or up 350% in about 1,000, like less than 1,000 days, less than 3 years, or just over 2 years. That's a great gain, guys. That's a great return. So, it's unlikely that we are going to get that massive, 300% from here. So that is what I'm saying, guys. The risk at the moment is to the downside. The risk is to the downside, and we've already had that move up, so it's definitely not wise to think that we're going to continue and go another 300% from here. And the risk to the downside versus the potential upside gain is just it's silly. It's silly. So I mean, if you took a long from here and you went into your 135k zone, that is where the market could top. Yes, it could top over here. But what you got to ask yourself, guys, is the 50% from low to high at the moment is sitting at that 70k. So price can easily go down to that 70k region. And this is a skew risk to reward to long, guys. This risk to reward to long is skewed. So, this is what goes through the mind of myself. And this is why I'm not extremely bullish and more on the cautious side of things, guys. It is Q4 of 2025. Q4 2025 has been the place to take profits for a couple years now. That has been the timing target. Yes, we have had 135k was the number, but from a timing point of view, and it's always best to look at the timing. The timing was Q4 of 2025, and we have just finished the first third. My bad, guys. We have finished the first third of the quarter. So going into November. November starts tomorrow. We're pretty deep into Q4. So that's what you got to ask yourself, guys. Yes, this can run more, guys. I have said it before. We haven't had the death cross yet. The death cross is normally obviously a lagging indicator and does confirm that you are in that bear market. But the 50-day EMA is starting to turn around, and it looks like this. So yes, we can get another push up, but this high over here to that high over there was a 47% move, and this high to this high over here was a 16% move. So what you can say from this is that the highs are becoming, or the move from top to top and then top to top again is becoming smaller, which is this is typically what happens towards the end of the cycle. So here you can see from top to top, you got those bigger gains, you got that 36%, and then it does slow down towards those market tops, and then you get a tiny little push up here of 1 or 2%, something like that. But this is what you got to look out for, guys. When you do see those tops come in at much significant lower percentages, then that is a potential red flag. So here we had top to top over here, good 54% move, good 50% move over there, good 50% move over there. Basically, we're using round numbers here, and this is a 15% move deviation of these highs over here. So this is why it is looking potentially scary, guys. This is looking potentially scary. So Bitcoin on the brink. Yeah, let's get into the rest of it. So this is a potential short idea. If you guys are interested in shorting, personally, I'm not going to be shorting at all. I'm going to take a break from the trading. Yeah, we've been working hard for 3 years, this whole bull market. So, it's definitely time to take some time off over here. So I'm not going to be actively engaged throughout the bear markets. I'll come when things are looking a bit better. So one thing I want to speak about quickly is the total crypto market, because this is also getting a nice bounce. And what we must remember, guys, is that, when you start to knock on the door's eventually going to open. So what I'm saying here is that we're knocking on the door. 1, 2, 3. This is now the fourth touch yesterday. The fourth touch is often where it does break through. So this is something that we definitely have to watch out for, is the fourth touch. And the fourth touch, looking at other charts, is also very much present with USDT dominance. And of course, USDT dominance, this is your stable coin dominance. So if your stable coin dominance is increasing, it obviously means that there's money rotating or crypto rotating from assets such as your Bitcoin, your Ethereum, your Solana, your XRP, and it's going into USDT. So this is inversely correlated to the crypto market, which means if this is moving to the upside, the money is rotating from crypto into USDT, and the USDT dominance is going to increase. And what you can see here, guys, is that we also have 4 touch points over here. So we got 1, 2, 3, 4. 4 was yesterday. Yesterday, when we were trading above the macro 50% level, and of course the macro 50% level comes from that low that we did see in April. This was a significant crypto low, which is of course a USDT dominance high, to the crypto highs that we did see in August. This was of course the majority of the market, not Bitcoin. Bitcoin did make a higher high, but that halfway point comes in at that 5.1%. And if we start to close candles above this 5.11%, it puts USDT dominance in a strong position. So it's in a weak position in the lower half and a strong position in the upper half. And if we start to close multiple candles above this 5.1%, it is going to be looking really strong for USDT dominance, and it's actually going to be looking weak for the crypto market. And you can expect lower prices. You can definitely expect lower prices for the crypto market. One little concern here, guys, as well, is that there is the golden cross. This is the golden cross over here, the golden cross of USDT dominance. Golden cross is, of course, a lagging indicator. And, you know, it does give a lot of confirmation. For me, it is a very powerful signal. So when we do get the golden cross, it does often mean that the trends are changing. And we had the death cross, and we made the most of those crypto rallies. And this death cross over here for the crypto, which might happen, for now it is a golden cross in the USDT dominance. This is extremely strong support. These EMAs over here, extremely strong support over here. So, you know, if you do get crypto rallies or little pullbacks in USDT dominance, expect a strong bounce off these EMAs, guys. So it's going to be very tough for the crypto market to make massive rallies to the upside. So that is something that we definitely got to watch out for, guys, is that USDT dominance is actually looking very strong at the moment. Nothing is confirmed. We still need a few daily closes above that 5.11%. But this is the line in the sand, guys. This is the line in the sand. It's time to watch out. One thing I want to speak about, guys, is total 3 as well. Total 3 on the brink here. You can see 1, 2, 3, fourth touch over here as well, sitting nicely on this 200-day EMA. And when we start to close underneath this, it is going to start to look very, very scary, guys. And just understand that these moves can happen very fast. No, we didn't manage to get that perfect cup and handle. You know, people have been selling off at that $1 trillion mark over there. But just remember, guys, that when we do get those death crosses and start to consolidate under those EMAs, you can drop extremely quickly, guys. These drops are very, very scary. And the last thing you want to be is, you know, on the wrong side of this. This is very painful, guys. You know, if you are in altcoins and you're getting smashed 40%, you know, the last thing you want is just a significant part of your net worth in these 40% dumps. Because remember, a 40% dump means that you need to make a, you know, 75, you know, we're going to use rough numbers here, percent move to the upside to get your money back. So very tough when you are on the wrong side of things. Yes, the chart is a bit messy, guys. Haven't been paying the most attention at the moment. But one thing I want to speak about as well is others, spoke about others as well. I think at the start of the week when we were trading around here, is that we got the others death cross. This is happening today, most likely. What you can see, EMAs are about to crossover right over there. And this is a huge, huge, huge warning sign, guys. It looks inevitable. It looks like it is going to happen. So this provides a massive amount of resistance for the crypto market, guys. Massive amount of resistance. So, you know, if we're going to rally, expect that we are going to get rejected off here. Bang, rejected, down. And the reason I'm completely out of my, you know, others is, of course, the total crypto market, excluding the top 10, is because what I want to see to get bullish on this is for price to climb up here and get above this 280 billion zone over here and hold this as a strong support. If we hold this as a strong support right over there, then this is going to be my signal to go long. And then, yes, we can look for those higher levels. But for now, this is the line in the sand. So normally what happens is if you do make a push up, you're going to come and retest this as support. So, you can get in now, but the risk to coming to this 50% wick over here is extremely high in my opinion. So I do think we could get a bounce off the 50% wick. Of course, death cross looming over here, huge liquidity. This was of course on the 10th of October. And when you are left with these massive wicks with a decent amount of volume, you often do retest that 50% wick, guys. We've spoken about this for a while. So, the risk at the moment for sitting in altcoins, the risk to reward is poor at the moment. So what I'd want to see is for others to reclaim this $280 billion mark as support before I get bullish on any altcoin, guys. Any altcoin. For now, I'd be focusing on mainly the blue chips. And ETH, quickly, let's go over ETH. We spoke about this opportunity. We didn't get into the shorts. We were looking to find the touch of this descending resistance over here. This would have been a good shorting opportunity, guys. I've spoken about this 50% wick on Ethereum at basically at $3,600. We are yet to hit that. So I do think we are going to hit that, come down into here, test this 200-day EMA again. Maybe make a higher low, get some bullish divergence over there on the RSI. Of course, RSI making a higher high. We'll have to see what price does when that happens. But this would be a good long opportunity coming back, maybe breaking out here. Let's see, guys. But for now, the risk at the moment, to long now, I think it's better to wait to get Ethereum above this obvious level over here before taking longs. This is where you want to be taking longs. Yes, you'd get a better entry now, but the risk to the downside is very high. If we do reclaim $4,300, that would be your opportunity to go long. So this is what's going through my mind at the moment. Not really interested in longs or shorts at the moment, just waiting for price to make a move. If we do tag this 3,600 for ETH, I could be interested in some swing longs. Or if we reclaim $4,300 for Ethereum, then I also would be interested in some swing longs. So that's kind of the plan at the moment, guys. For now, we are sitting in no man's land, basically perfectly in between the EMAs, 6% to the 50 and 7% or 6% to the 200 to the downside. So we're sitting smack bang in the middle. Remember, guys, when you are in between them, you do often chop around and make no move. So watch out for that, guys. XRP as well. We spoke about this trade on XRP. Didn't actually get into it. I should have got into it. I think we spoke about it a while ago. Basically rejecting off this important zone over here, these EMAs over here. And this is also looking like a death cross could be on the cards. If XRP can't make a move soon, a trade like this could be on the cards, guys. And again, looking for that 50% of the wick. So if you are looking at tokens, you can look at that 50% of the wick for a potential target to the downside. Something like SUI, for an example, it isn't there. You take your fib tool over here, and you'd find that close over there, bang, to the bottom of the wick, boom, $1.58. Guys, this is where I'd be interested in SUI. $1.58. This is the zone. You can go on through all the tokens and find 50% of the wick. And that is where you'd be interested, guys. Ondo as well, all the way down here. Pretty sad to see Ondo at that 24 cents the other day. Absolutely absurd. But this is where your buy zone would be, guys. This is where your buy zone would be. And, this can happen very quickly. Guys, this happened in one day. A move from there to there happened in one day. So, it can easily happen again. Looks like the perfect move straight into that box there as well. That's that, guys. That's that. So basically, crypto on the brink at the moment. Bitcoin bouncing off the 200-day EMA, but not expecting a, huge day, like a 8% day, 6% day, nothing like that. Get into the stocks as well. Have a look at the S&P. The S&P 500 is still bullish, though. A lot of panic yesterday, but ultimately nothing happened over there. Nasdaq still at 26,000 points, which is absolutely absurd. Gold holding that $4,000 zone over there, of course, breaking down. Guys, we actually nailed this gold. We drew this parabola a while ago, and it's actually, you know, played ball pretty well there. But yeah, not much going on at the moment. I'm expecting some sideways price action. Of course, things like Meta getting some bad earnings might bring the market down a bit. Underneath the 200-day EMA over there. One super concerning thing at the moment, though, guys, is MicroStrategy. This isn't bullish. This is why I've been also very cautious in the crypto markets or the Bitcoin market, is because this is bearish, guys. MicroStrategy, of course, this is your leveraged Bitcoin play. Yeah, not happy with this. Death cross over there, losing the important support over there. Very bearish day yesterday. Yes, we have, you know, the pre-market is up a bit, but it's looking scary, guys. Not looking good. Yeah, not a good day to be a MicroStrategy bull. You know, there is a, you know, of course we could draw some lines and make some conclusions that, you know, we are at support here, which is fair enough, guys. This is fair enough. We are at support, but we need to hold this level. If we don't hold this level, you know, we can't see much lower levels. It doesn't seem like we could see lower levels, but you know, we always can. We can come and visit the zone over here. This $200 zone for MicroStrategy is a target over here. But let's see, guys. Let's see. This is looking heavy, guys. It is looking heavy, and this is a leading indicator, guys. MicroStrategy broke out before Bitcoin broke out, and MicroStrategy looking very heavy before Bitcoin looking very heavy. Yeah, so watch out, guys. Watch out for that. But guys, gonna end the stream there. Thanks so much for joining. I will see you guys next week for Macro Mondays. Have a good weekend. Cheers for now.